Now, the best performing market in Asia year to date is no longer Shanghai. It is Jakarta, where the Jakarta Composite Index has risen 73% year to date. Shanghai Comp has, of course, fallen back over the last few days. In fact, here are the top 10 best performing Indonesian stocks in the Jakarta Composite. Those returns, if we show that chart, are massive. Or maybe we don't have it, but they've all returned more than 400% year to date. Elvira Chandrawinata is analyst at BNP Paribas Securities. She joins from Jakarta with more. Don't worry, we don't have to show the charts. We can talk about them instead. Elvira, thanks for joining us. Tell me about this market. The economy is growing. Indonesia avoided recession. That's all great. But have markets got ahead of themselves?
I don't think so, because I think if you look at Indonesia now and compare that to like pre-crisis level, for example, it's still nowhere near where the valuations are. And if you compare Indonesia now compared to pre-crisis level, I think we're miles away. So we had like about 10 years of very difficult situation, which we have to bear with recession, restructuring. It's all very painful, but it's starting now to pay off. For example, the banks are now very strong. We're not looking at, explosion of NPLs. Actually, NPLs have been quite under control. We look at the economic growth. Yes, it's not back to pre-crisis level of 7 to 8%, but now with 4% in a really bad situation, we believe that now growth is more sustainable because, first of all, it's not financed by unsustainable debt as in the pre-crisis level, and second, because now growth actually is spreading out outside of Jakarta and Java area. So if you look at the latest economic numbers, we see that inland water transport has increased substantially, and this just points out to you that growth actually is becoming more diversified in Indonesia. So that should be very good.
Okay, well, let's take a look at some of the companies which you like, areas where Indonesian companies can make money. One of these is auto assembly, motorbike parts and car parts. Astra International is the stock. It's risen 193% year to date. The code is ASII. You see growth there?
Yes, I think, the stock definitely has done well, but I think there's still some more upside potential because, yes, we all know that interest rate is currently at record low. But if you look at the auto numbers, it's not yet reflected in any way. So we do expect volumes to pick up significantly in the second half, and especially in the 2010 and 2011. And what's interesting there as well is that Indonesian GDP now reaches about 2,400, and looking at the experience of Thailand and Malaysia, when their GDP level reaches the 2,400 levels, four-wheelers market is basically starting to explode. So I think this is also going to be repeated in Indonesia. Especially now, given that interest rate is very low. So yeah, I still think that even though it has outperformed the market by some 100%, it still has some growth left. And I'm actually comparing it now to pre-crisis level.
Okay, fair enough. I mean, I believe you, okay, but 193% sometimes makes me a little bit nervous. Let's look at one that's been a real laggard. That's Telkom Indonesia, the biggest telco in Indonesia. It's up just 24% year to date. That's miserly. Does that suggest it's going to explode, or is this just a safe and boring company for you?
I think, Telkom Indonesia should also benefit from increase in discretionary spending. But I think the industry now is plagued by a little bit, more competition. If you look at the fixed wireless, it's now getting traction. So I think this is the reason why it's been a laggard. But, once the consumption starting picking up again, I think, yes, people will actually probably rotate to some of the more defensive play like Telkom Indonesia, which, as you said, it's a laggard, only up by 20%.
Okay, and you don't get much more defensive than food, but you like Indo food. It makes noodles, baby food, coffee, everything you like, really. It's up 166% year to date, so it really has been a beneficiary of optimism about domestic growth. Again, you seem to feel that this one has further to go.
Yeah, I think with Indo food, I think the recent run-up in price, of course, it's a re-rating as well because this stock has been such a laggard. But of course, also it was driven by the rise in CPO prices. So even though that CPO price have done really well, the food segment is still very undervalued, in my opinion. The reason being is that now PE is only at 11 times, whereas the plantations is valued at about 13, 14 times. And, given that it has such a great brand equity, I don't think that the food business actually should be traded at lower than the CPO side. So yes, even though it's up by 100, I still think that there's still upside there.
Okay, you like Bank Rakyat and Bank Danamon, but you mentioned you like banks generally anyway. One final stock, and very briefly, Ciputra Development, the third biggest property developer. This one up 313% year to date. Surely no higher.
Yeah, you have to remember that, once in the third and fourth quarter in 2008, we see that the stock collapsed. So actually, yes, it's gone up by 300% or something like that. But, again, it's a play on the low mortgage rate. It's also a play on assets because if you look at the pre-crisis level and now it's nowhere near it, yeah.
Elvira, we're going to have to wrap it there. Thank you very much indeed, Elvira Chandrowanata, analyst at BNP Paribas Securities.